Married couples have a choice when filing their 2025 federal income tax returns. They can file jointly or separately. What you choose will affect your standard deduction, eligibility for certain tax breaks, tax bracket, and, ultimately, your tax liability. Which filing status is better for you depends on your specific situation. Minimizing tax. In general, you should choose the filing status that results in the lowest tax. Typically, filing jointly will save tax compared to filing separately. This is especially true when the spouses have different income levels. Combining two incomes can bring some of the higher-earning spouse's income into a lower tax bracket. Also, some tax breaks aren't available to separate filers. The Child and Dependent Care Credit, Adoption Expense Credit, American Opportunity Credit, and Lifetime Learning Credit are available to married couples only on joint returns. And some of the new tax deductions under 2025's One Big Beautiful Bill Act, OBBBA, aren't available to separate filers. These include the Qualified Tips Deduction, the Qualified Overtime Deduction, and the Senior Deduction. You also may not be able to deduct IRA contributions if you or your spouse were covered by an employer-sponsored retirement plan such as a 401k and you file separate returns. And you can't exclude adoption assistance payments or interest income from Series EE or Series 1 savings bonds used for higher education expenses if you file separately. However, there are cases when married couples may save taxes by filing separately. An example is when one spouse has significant medical expenses. Medical expenses are deductible only to the extent they exceed 7.5% of adjusted gross income, AGI. If a medical expense deduction is claimed on a spouse's separate return, that spouse's lower separate AGI, as compared to the higher joint AGI, can result in a larger total deduction. Couples who got married in 2025. If you got married anytime in 2025, for federal tax purposes, you're considered to have been married for all of 2025 and must file either jointly or separately. And married filing separately status isn't the same as single filing status. So you can't assume that filing separately for 2025 will produce similar tax results to what you and your spouse each experienced for 2024 filing as singles. Even if nothing has changed besides your marital status, especially if you have high incomes. The income ranges for the lower and middle tax brackets, and the standard deductions are the same for single and separate filers. But the top tax rate of 37% kicks in at a much lower income level for separate filers than for single filers. So do the 20% top long-term capital gains rate, the 3.8% net investment income tax, and the 0.9% additional Medicare tax. Alternative minimum tax, AMT risk, can also be much higher for separate filers than for singles. Liability considerations. If you and your spouse file a joint return, each of you is jointly and severally liable for the tax on your combined income. And you're both equally liable for any additional tax the IRS assesses, plus interest and most penalties. That means the IRS can come after either of you to collect the full amount. Although there are innocent spouse provisions in the law that may offer relief, they have limitations. Therefore, even if a joint return results in less tax, some people may still choose to file separately if they want to be responsible only for their own tax. This might occur when a couple is separated. Many factors. These are only some of the factors to consider when deciding whether to file jointly or separately. Contact us to discuss the many factors that may affect your particular situation.